Hi, everyone, and welcome to this first Geopolitical Economy Hour. I'm Radhika Desai.
And I'm Michael Hudson.
Every fortnight, we are going to meet for an hour to discuss the major developments in the fast changing geopolitical economy of our 21st century world. We'll discuss international developments, we'll discuss their roots in individual countries and regions. We will try to uncover the reality beneath the usually distorting representation of these developments in the dominant Western media. We plan to discuss many subjects: inflation, oil prices, de dollarization, the outcome of the war over Ukraine, which is going to determine so many things, the threats the US is making against, threats to China that the US is making about Taiwan. China's increasingly prominent role in the world, how its Belt and Road Initiative is going to reshape it, how Western alliances and the Western dominated world that was built over the past couple of centuries is so rapidly fracturing. We'll discuss financialization, the West's productive decline, many other things. Michael, am I leaving any important things out?
Well, we'd been talking about this for many decades. Already in the 1978, I wrote a book, Global Fracture, about how the world was dividing into two parts. But at that time, other countries were trying to break free so that they could follow their own development. And today, it's the United States that's isolating other countries, not only China, Russia, Iran, Venezuela, but now the global south. So the United States has ended up isolating itself from the rest. And so what we're going to talk about is how this is not only a geographic split, but it's a split of economic systems and economic philosophy. So we're going to talk about what the characteristics are and the policies that are shaping this new global fracture.
Indeed, Michael and my collaboration go back a couple of decades. In fact, even before we met, I had read books like Global Fracture, Super Imperialism, etc., which were quite prescient and with which I agreed. Contrary to all those people talking about globalization and US hegemony, etc., Michael could see, and I also could see, the fractures underlying the system. So my own approach has been characterized by such skepticism about enduring Western dominance, US hegemony, dollar dominance, etc., etc. And after thinking and writing about small bits about it for a couple of decades, I eventually came up with this book, Geopolitical Economy, which Ben has also taken this the title of the Geopolitical Economy report, with which, of course, we are collaborating. And in geopolitical economy, I question the dominant cosmopolitan understandings of the world. In globalization discourse, the world is seamlessly united by markets. In American hegemony discourse or hegemony stability theory discourses, the world is united by a single leading power. None of these narratives are really true. And the advance of multipolarity, which I've argued goes back at least to the 1870s, continues apace. And of course, today it is in a very rapidly advancing phase, and we are looking at some major changes in the world order. So, we are going to be discussing all these things. But today, for our opening show, what Michael and I thought we would do is, we've told you a little bit about ourselves, but really, we would like today to simply introduce the big idea, the big frame that frames our thinking, which is the advance of multipolarity, the difficulty of retaining Western dominance. The difficulty is so great that not only are Western attempts to preserve this dominance futile, but they are even counterproductive. Attempts to try to retain dominance, like the conflict over Ukraine or many other things, are actually boomeranging. Financial sanctions against Russia, etc., they are boomeranging back on the West. So we are basically want to talk about this big idea, the emergence of the multipolar, or some might even say a bipolar world order. So, Michael, do you want to start off with some reflections on that?
Yes, I think the most obvious driving force that's splitting the world is the U.S. attempt to create this unipolar world order under its control of its national security diplomats and its financial interests. And They insist in monopolizing the international financial system so that if countries try to follow a policy that supports their own development, the United States can simply pull the plug and block their financial transactions. The US tries to control the oil trade. Oil has always been, for the last century, a centerpiece of American diplomacy, because if the American oil companies, along with British Petroleum and Dutch Shell, can control the oil, then they can turn off the power and the lights and the transportation of any country that is not following the US plans for a world order. And also food. The United States, from the time that the World Bank was formed, has blocked other countries from developing their own food production and has steered them into producing export crops, non-food crops, tropical crops, remaining dependent on the United States for its grain, so the United States can starve them out if they try to go their own way. So the United States approach to leading the world order is to lead by being the aggressor, to threaten, to hurt other countries, not by providing mutual gains, not by helping them developing, but saying, if you don't do what we want, we will overthrow you. We'll have a coup d'etat. We'll do to you what we did with Pinochet in Chile. We'll do to you what we did with Boris Yeltsin in Russia. We'll interfere. And this has been easiest of all, and probably the most corrupt region of the world, Western Europe, where the United States Treasury officials have told me all they need to do is give little white envelopes filled with dollar bills, and they've been able to control European politics. So you're having the United States essentially trying to use its threats, its sanctions, and it believes that it can hurt another country. And behind it all, of course, is the military threat, as we're seeing in Ukraine. But it turns out that there really isn't any military threat by the United States. Not only has it and NATO run out of normal military arms, but America really can't mount a land war anymore. There will never be another Vietnam. There will never be the United States invading any other country or Europe invading any other country, and because you'll never get a population willing to be drafted. The anti-war movement. And without that, America has only one military lever against other countries, the hydrogen bomb. There's nothing in between a targeted assassination attempt and an atom bomb. So that basically is what has enabled other countries for the first time to break away. And they couldn't do this back in the 1970s when Radhika and I were first noticing it, because at that point, Indonesia and the Caribbean and Latin America didn't have the critical mass to go it alone. Well, now they have the critical mass to go it alone. Thanks to China, Russia, Iran, India, they're able to go it alone. There's only one part of the world that's not able to go it alone, and that's the United States and Western Europe. They've deindustrialized. They've essentially, in their class war against labor, looking for lower priced labor abroad, they've cut their own industrial labor force, but they've also shifted the center of manufacturing, technology, agriculture. Everything is shifted to Eurasia and the southern hemisphere, and the United States turns out to have left itself alone. So the problem that is frustrating American diplomats is, how are they going to dominate the world without industrial leadership, with a debt deflation, with a debt that's much higher than other countries? How on earth can they leave in a weakening position without even any military? That's the problem that we're trying to solve and that we'll discuss.
Absolutely. And I think, Michael, this whole point you're making, which is that the United States attempt to dominate the world is increasingly failing. The United States turns out to be essentially a giant with clay feet. From the point of view of today, it becomes much more credible to say so. But I've been saying, and I think saying also with the help from a lot of help from Michael's writings and so on, In reality, when people talk about American hegemony, American dominance, American imperialism, etc., what we have to realize is that what we are looking at for what the United States has attempted to do for more than a century is attempt to dominate the world. But this attempt has actually never been successful. So the story that I tell in my geopolitical economy is actually a rather different story, which does not try to deny the huge extent of the harm the United States has done by its wars, by its economic coercion, by its suppression of attempts of countries to develop. It acknowledges that these have all the things have happened, but the key point is the United States has never actually succeeded in exerting its dominance. So what we are looking at today, what we are calling multipolarity, is in fact shows the failure of American attempts to dominate. So what I argue is that the United States ruling elites from the early 20th century have sought, in the early 20th century, it was very clear to many observers that British dominance over the world economy was weakening, and the United States felt that it was going to be going to take over the torch, in a sense, from Great Britain and be the dominant power in the world. They knew, of course, even then, it was very clear that they would never be able to match the scale of British dominance. They could never acquire an empire, a formal empire of the size that Britain had. Remember, Britain had an empire on which the sun never set. So what they decided to do is they decided to instead lower their sights and say, okay, we can't have an empire of this size, but we are going to try to make the dollar the world's money. The way in which they tried to do so after the First World War and the financial mayhem they caused, etc., is a really interesting story that I've written about, Michael's also written about, and so on. But after the Second World War, we are told that the dollar became the world's currency and so on. But the fact of the matter was that the first attempt to try to make the dollar the world's currency fell foul of the very famous Triffin dilemma, which is to say that since the United States could not export capital, since it had no capacity to do so, Britain could export capital because it had an empire. It had an empire from which it drew surpluses. So the United States had no such empire, no such imperial surpluses. So it created dollar liquidity by running deficits. And Robert Triffin pointed out, the bigger the deficits, the lower will be the value of the dollar and the lower will be the attractions of the dollar. This logic finally worked itself out, and the United States was forced to break the dollar's link with gold because people were ditching the dollar in favor of gold. Countries were ditching dollars in favor of gold, including famous Western allies, European allies, and so on. And since then, what Michael and I actually also argued in a recent paper we did called Beyond the Dollar Creditocracy, we argued that since 1971, and by the way, this is also my argument in geopolitical economy, since that time, the dollar has become reliant on a series of financializations or a series of expansions of purely financial activity, so that the unattractiveness of the dollar for normal economic uses, trade uses, and so on, is counteracted by vastly expanding the financial demand for the dollar. And that is why this age, the post-71 age of so alleged dollar dominance, in fact, which has been rested on a series of financializations one after another, it has also been an age of recurring financial crises. So what I want to emphasize is that what we are looking at is the result of American attempts to dominate the world, but they are all attempts that have failed. And this is another story which we will tell.
Well, it's interesting that when President Biden and the State Department and the media talk about what's happening in the world and they describe policy, they don't talk about anything that Radek has just said. And they don't even talk about the fight between unipolar and multipolar world. President Putin talks about that, and Secretary Lavrov talks about that, but not the US. If you listen to what President Biden and the State Department says, this global fracture is between democracy and autocracy. That's how they characterize it. Well, by democracy, this is Orwellian doublespeak for a financial oligarchy. Aristotle, 2,500 years ago, wrote a book on constitutions of Greece and said, all these constitutions call themselves democracies, but they're really oligarchies. And democracy tends to turn into oligarchy. So by a democracy, that what President Biden means is a financial oligarchy and control of policy. And what Biden means by autocracy is a mixed public-private economy with a strong government support for industry, for technological research and development, for rising living standards, and for, most of all, for providing basic needs, public health, public education, retirement income, transportation, all subsidized to minimize the cost of living for labor so that the economic surplus can go to upgrade education, improve the productivity of the labor force, and do essentially what China has done and what other countries are doing and what everyone expected industrial capitalism to do in the United States and Europe, but which finance capitalism is not doing. So you have to go beyond this rhetoric to say what is really happening to the Americans. Public spending and monopoly regulation and protection of consumer rights is socialism. Well, it is socialism, and that's why in the United States they've done polls and find that most people prefer the word socialism to capitalism, and that so many people in the United States claim to be socialists, but finance capitalism is not socialism, and this distinction, which Rosa Luxemburg called the fight between barbarism and civilization, that's really the fight between democracy and autocracy with a different vocabulary.
Yeah, you raised so many really interesting points, Michael. Let me just take one or two of them. First of all, the United States claim to lead the a democratic world, to stand for human rights and democracy and so on, sounds increasingly hollow. And this is also really interesting to reflect on why. Because the policies that the United States has had to follow in order to exert dollar dominance, in order to create the financializations on which dollar dominance rests, have tended to undermine the United States productive economy. They have tended to divide society because they have created astronomical levels of inequality in the United States and other countries that follow that sort of policy paradigm. And as a consequence, they have essentially created the present political breakdown that we witness in the United States, where a character like Trump can get elected president, and then when Biden is elected, he must more or less continue Trump's policy. So you're looking at a serious breakdown in a breakdown of democracy in Western countries themselves. So so that's one thing. But there's another thing, that Michael said that I also wanted to pick up on, because this is going to be a show about world affairs, and it's interesting to explain to you a little bit about how our approach to world affairs differs from the ones that you normally see. So in the study of international relations, some people take a liberal point of view, which is essentially what I was earlier criticizing, the globalization, US hegemony, cosmopolitan views of the world economy, in which the world economy is seamlessly united. Nations don't matter, nation states have become irrelevant, etc., etc. So you can take that point of view, or you can take a so-called realist point of view in which all nations are out to essentially do down other nations. But in reality, the point of view that we take comes from a very strong tradition of critical thinking that goes back to Marx and Engels, but has continued and developed in a big way since then, which is to understand world affairs as the contest between imperialism and anti-imperialism. Trotsky used to call this uneven and combined development. That is to say, the countries that are already developed, the imperialist countries, want to retain the uneven configuration of development in the world, with some countries being developed, other countries less so. But the ones who are less developed, the ones who are left behind, contest this by promoting their own development through policies that are designed to improve their productive capacities and so on. So, what Michael is trying to say when he says that the United States has tried to always prevent development is basically, for all the talk of Western countries trying to help the development of third world countries, in reality, when third world countries develop in the only way they can, which is by focusing on productive activity, controlling trade and financial flows, and so on, as all successful developers have done it, including the United States in its own time. When they try to do this, the United States tries to force them open. They talk a lot about free markets, free trade, openness. What does this openness really mean? It means that countries should lay themselves open to being dominated by, penetrated by Western capital, Western corporations, and be open to supplying cheaply what the West needs, namely commodities, namely labor, low-cost goods, etc., etc. So this is really a contest of anti-imperialism and imperialism, in which today the crux of multipolarity is that the forces of anti-imperialism are winning.
Well, what Radhika said that is most radical is that America really trying to stop the development of other countries. Well, this may seem surprising to some people, not listeners to this show, but those very words were set into stone in the America's National Security Report, saying that any other country's development to the point where it is independent of the United States is a threat to the United States. And the reason that China is the number one opponent and rival, a systemic rival, as they put it, to the United States, is that it is developing. And the United States really is against any development except that which American financial interests can control and receive the rental earnings and the profits from turning this development into a U.S. monopoly. So I guess what is going to be really unfolding in this show and the futures is we know the aim of other countries is to develop. We know what they want to do. How are they going to actually implement this in policies? Radhika mentioned my book Global Fracture back in the 1970s, and that was right after the Vietnam War had forced the United States off gold, and Saudi Arabia had taken ownership of its oil reserves. And the U.S. diplomats already at that time were worrying how to make sure that all the development was U.S. centered, not foreign centered. They were in the dark about how to navigate. And ironic as it might seem, I was hired by Herman Kahn at the Hudson Institute to go to the State Department and the White House and the Defense Department to explain how superimperialism worked. And the largest purchase of my book, 2,000 copies were bought by the CIA. CIA, I was told, is a operations manual for how to do it. The United States thought that, well, if we can continue to make other countries keep their savings in the United States by buying U.S. Treasury bills, if we can tell Saudi Arabia and the oil countries that they can charge whatever they want for their oil if they quadruple the price of oil, but they have to keep all of their earnings in the United States, in the U.S. stock market. They cannot buy a major U.S. corporation. The U.S. can buy control of other economies, but no other country's investors can buy control of critical U.S. industries. Saudi Arabia can buy minority stock holdings. It can buy treasury bills. The Japanese were allowed to buy golf courses that they lost $1 billion on. They were able to buy the land under Rockefeller Center that they lost $1 billion on, but they couldn't really buy American industry. So you had the whole plan for what seemed to be a successful making other countries dependent on the United States and U.S. satellites. And they were getting very little for their dollars. But the fact is that the United States found that it had developed a new kind of imperialism. It wasn't the old colonial imperialism. They looked at what happened to Haiti when it bought its independence from France in 1804. France said, yes, we will give you the independence, but you have to reimburse our military invaders for having conquered you. You have to pay them for the current value of what they took for free when they took you over. And Haiti, for the last 200 years, has been a debt peon of the France and the international financial community. The United States said, we can do the same with other countries. We can make them borrow and base their monetary systems on creating their own credit by US banks, creating their own credit in dollars, and all of the interest payments and the capital gains on all of this will be remitted to the United States. We don't need a military colonialism anymore. We know that we can't have another Vietnam. What we can have is dollar dependency. And that is a system that they put in place. And that is why the focus of the talks between China, Russia, Iran, and the global South has been de-dollarization. And that's what both Radhika and I have been writing about and focusing on for the last few years.
Absolutely. And one of the things that also I was reminded by from what you were saying, the United States itself has changed its economic structures very radically over the post-Second World War period. Because if I remember when I was researching my book, Geopolitical Economy, I came across this quote from a major American official at the end of the Second World War, where he says that today we account for half of the world's production, and our aim should be to retain that position of relative dominance. That is to say that the United States must continue to account for half of the world's production. So the rest of the world can only grow insofar as its growth does not outpace that of the United States. But of course, that is exactly what happened. It was impossible. One of the things people forget, even major historians such as Eric Hobsbawm, for example, when you read their books, Age of Extremes, in which it's a history of the 20th century, he talks as though, the United States started growing from the late 19th century onwards. By the eve of the First World War, it was a really major producer. And so when it came to become such a dominant producer, but when it came to account for half the world's economy at the end of the Second World War, this was some kind of a completely natural process. What people entirely forget is that the United States acquired this position of dominance not through some secular process of growth, but because of the war. During the war, the United States essentially grew as the so-called arsenal of democracy. Its economy boomed between 1939 and 1945. US GDP doubled in about 6 years, right? It would not double again for another 22 years, even though these were the years of the so-called golden age of capitalism when growth was relatively high. So you can imagine the sort of boost that the war gave the US economy. Plus, of course, if you're talking in relative terms, the war is boosting the US economy while it is destroying productive capacity in the rest of the world where the war is actually occurring, where the fighting is actually happening. So it was the complex result of these. So there was nothing natural about the US position of dominance. And there are a couple of things one can add to this. Today, when people are once again celebrating the United States role as the arsenal of democracy, people, it's really ironic because the United States, both in the First World War and the Second World War, profited in this manner. Many countries, so-called allies, have only recently finished paying off the war debt, etc. So the United States essentially has been indebting other countries simply by posing as an ally when in fact it was not an ally. The second thing is that, of course, this also should give some background to how the US economy has become so reliant on military production, on armaments production, why the military-industrial complex is such a big part of the U.S. economy.
Well, you pointed quite right to the role of debt in all of this. The war during World War II, the United States used its position of supplying arms to the Allies to force the creation of the two institutions, the World Bank and the International Monetary Fund, along lines that were opposed by Europe, but were designed to, number one, break up the British Empire. Under the Lend-Lease of World War II and under the terms of the International Monetary Fund, they made Britain overprice the pound at £5 per dollar and promise not to devalue it until 1949. They also insisted that Britain could not maintain its sterling area. Britain had a sterling area that was much like the dollar area today. During the war, India and other former colonies had exported raw materials and built up huge government savings in exchange for these raw materials. And they were, as the sterling area, they were obliged to spend all of these savings on British manufacturers. But America said, we want free markets. Free markets means you can spend your money anywhere. They broke open the British sterling area and said you can buy goods anywhere, meaning from the United States, because with Britain being committed to an overpriced pound sterling and the United States having the industrial capacity, the United States ended up with all of these savings that the British Empire had accumulated. And the United States had, under Franklin Roosevelt, signaled Britain is America's number one rival. That Britain was in the position that China is in today. So the empire was broken up and basically forced into debt in the balance of payments because Britain could no longer earn its way to dominate the sterling area by exporting. It was on the road to deindustrialization. Well, meanwhile, the second thing that is important is that the United States emerged from the war, like other countries, with almost no domestic debt at all. The Depression had wiped out domestic personal lending, corporate lending. There was nothing to buy during World War II in the civilian economy because it was war production. So there was hardly any debt. So since World War II, every recovery, there's been a business cycle in America, Europe, all over the world. Every business cycle recovery has started from a larger and larger proportion of debt to GDP, a larger proportion of personal debt to personal income, and corporate debt to corporate income. This is what has essentially made America having to spend so much money on domestic debt service that neither its labor can compete with other countries if you have to pay mortgage debt and personal debt and credit card debt, but American industry is debt-ridden. So suppose now you're China, Russia, and the global South. How can they develop their economies in a way that does not simply replicate the American debt overhead? How can China develop its real estate without following the American real estate that what people thought was increasing middle-class wealth by the price of housing going up and up? All of a sudden, you're house poor. You're spending so much money on your mortgage that you don't have enough money to buy goods and services. How are China, Russia, the global South going to create an alternative economic system that doesn't simply replicate what the United States has done since World War II? And how are they going to create, to help this, an alternative to the World Bank and the International Monetary Fund that is quite different and different principles?
And that brings us to another theme that Michael and I have both collaborated on and written independently about, which is really what should the structures of finance ideally be? And when Michael poses all these questions, how can China organize its financial sector and its economy in such a way as to promote production without creating these debt overhangs, etc., etc. In one sense, of course, these are always new questions because economic circumstances change. But in another way, we have models going back at least a century and a half, etc. That is to say, that in their own industrialization, major industrial countries, including the United States, Germany, Japan, China today, they have all had financial sectors in the period of their most rapid development. So for the United States, we're talking about the 19th and early 20th centuries. In this period, they had a very different model of finance. In this model of finance, it was the financial sector was structured in such a way as to aid production. Finance was the handmaiden of production. Finance facilitated long-term investment in productive capacity. Finance did not focus on consumer lending and so on. In fact, there was hardly any consumer lending. So in all of these ways, finance has actually powered the development of these countries. And as I say, finance was subordinated to production. By contrast, back in the 19th and 20th, from the beginning, essentially, Britain has always had a very different financial model, which ironically, for the home of the first industrial revolution, actually was not geared to promoting production. It was rather geared to short-term credit for commercial purposes, eventually for speculative purposes, and so on. So this short-term financial model, which was originally British, but now has also been adopted by the United States through a creeping process of financial deregulation that began in the 1970s and 80s and reached a peak in the repeal of the Glass-Steagall Act in 1999 under the supervision of none other than the so-called maestro Alan Greenspan. I'm sure we will have an episode discussing the role of central banking as well. But anyway, so this model of finance, which the United States has adopted over the last many decades, is actually the opposite of the sort of financial structures that you need. You need financial structures that are going to aid production, whereas these financial structures actually strangle production. These financial structures actually create the economic inequality, which we have seen scaling new heights. And the opposition of the interest of finance and production is so great that we saw, for example, during the pandemic over the last 2 or 3 years, while the economy was tanking, stock markets were doing nothing but scale new heights and increase the wealth of those with the greatest number of financial assets. So this contrasting models of finance, historically and today, will be another theme that Michael and I will be addressing.
Well, what's so remarkable is that the point that Radhika has just made was well understood in 1914. After World War I broke out, the British press began to write articles about how they thought that they probably were going to lose World War I because of British banking. They said Germany has a great advantage over the United States. In Germany, the banking is for long term. There's a three-way triangle between the German government, the banks, and the large corporations, especially the steel making, heavy industry for the military. And there was a belief that German industrial banking had somehow, they'd been able to industrialize the banking that in England still was in the post-feudal system. It was short-term banking. The financial time frame was only short-term, and the British stock market, especially, was hit and run. It was like brokerage in the United States today. They'd put clients into a stock. They'd pump and dump. That was the British way of making money. But when the British were creating the industrial corporations, they were run by financial managers, just like has happened in the United States with General Electric and other financialized firms. They didn't take their profits and reinvest in new industrial capital formation. They paid them out in dividends. instead of industrial engineering, they had financial engineering. And the result was that finance in Britain was predatory. All of this was understood, and it was believed that somehow in the aftermath of World War I, you were going to have what Marx had described in Volume 3 of Capital, that finance was going to be industrialized. And Marx said one of the revolutionary role of industrial capitalism was to get rid of the landlord class and make land rent and natural resource rent part of the public domain, and not for private absentee owners, and to get rid of predatory finance, English style, and replace it with productive finance. And he believed that this would lead naturally into socialism, with the banks being, if anything, the model of socialist planning and government planning for the economy. And that was actually what was happening in Germany under the Reichsbank. I described this in my book, Killing the Host. And instead, what happened was, with America's victory, you had the Anglo-American financialization policy that, as you know, brought on the 1929 stock market crash and the 1931 debt cancellation of inter-allied debts and German reparations. So there were two opposing financial systems, and what Radica is saying that the global South and China and Russia are doing today is finally a recognition and a replay of this same debate between finance capitalism and industrial socialism that you had a century ago.
Yeah, and there's another point worth making in connection with the history that you were recalling, Michael. So, in the United States, like I said, in the late 19th and into the early 20th century, you had very different banking structures. And then, yes, as Michael said, in the 20s, particularly, the financial structure sort of began to evolve towards this British style, predatory, short term. Of course, you also had an enormous boom in consumer lending in the United States in the 1920s. These were the roaring 20s as we remember them. And a large part of what made them roar was a debt fuel consumption in the United States. But anyway, so there was that brief period, but then you got the 1929 crash, you got the Great Depression, and you got the Depression era banking legislation, Glass-Steagall chief among them, which really made American banking, US banking, among the most regulated banking sectors in the world. Because you had, a system of essentially state regulation of banks, and a sharp distinction between banks that were commercial banks that took the deposits of ordinary customers like you and me, and enjoyed federal deposit insurance, which was the new institution that was created by this Depression era banking legislation. So if you enjoyed federal deposit insurance, which it basically allowed ordinary depositors like you and me to have trust that, if we put a few $1,000s in the bank, or even it would not disappear if the bank went bust. But banks that enjoyed this deposit insurance were heavily regulated in terms of how much they could lend, at what interest rate they could lend, what purposes they could lend for, and they were forbidden from speculating in financial markets. Whereas banks that speculated in financial markets, the so-called investment banks, were not given federal deposit insurance. This meant, and this structure of US banking, which allowed US banks to play a positive role in the economy, continued, like I was saying, into the 1970s. And it was then, particularly after the dollar's gold link was broken, and it became gradually clear that expanding dollar-denominated financial activity would be able to counteract the Triffin dilemma to a considerable extent. That's when the financialization really took off. So you saw vast increases in financial activity in terms of government borrowing, in terms of lending to third world countries, eventually the stock market bubble, the dot-com bubble, the East Asian financial bubble, And finally, of course, the mother of all bubbles, which broke in 2008, the housing and credit bubbles. And of course, now we are said, nothing has been done in all of these decades, despite repeated financial crises, to regulate American banking structures, or very little has been done. And as a consequence, we today have an even bigger so-called everything bubble. Anything that remotely smacks of any lucrativeness is an asset to be acquired. So the United States has undergone quite a transition, and this is important to remember as well. And yeah, so I'll let Michael have a say if he wants to add anything
Well,
first.
what the implication of what you're saying is, what are other countries going to do to avoid this same problem? Because many other countries have followed the U.S. Bank philosophy. What we've been discussing is not at the center of economic discussion, either here or abroad. Well, what has made China so successful, and what is so unique and about Chinese socialism, is they have treated money creation, banking, and credit as a public utility. That means that if the United States cannot really cure the debt bubble that it's built up, as you point out, since the 1980s, because if it writes down the debt, there will be huge defaults. And in 2008, the head of the FDIC said that Citibank was the most corrupt bank and incompetent bank in the country. It was in negative equity. It had wiped out the entire stockholder wealth. But fortunately, President Obama had appointed a Treasury Secretary who was worked for Obama's sponsor, Rubin, is
Goldman Sachs.
yeah, essentially. And Obama was the political lobby of Citibank. They bailed out Citibank instead of letting it go under, and turning it into a government bank to actually loan money for productive reasons. Obama sponsored the super financialization of the United States, and since 2008 has created $9 trillion of subsidy to the financial sector that has used this 9 trillion to buy control of the industrial sector, to financialize corporations, to definancialize them, and essentially it's the financial sector that has helped destroy industry in the United States. Well, China is not in this position. It doesn't have a powerful financial interest to take over the government. Just the opposite. China has a very large corporate debt now, and especially a real estate debt. When its corporations get insolvent, China does not say, well, we're going to break you up and you'll have to be sold to foreign buyers or anyone who can buy them. China simply writes down the debt. And it's easy for it to write down the debt because it's writing down debt that's owed to itself. There is no private bank to say to fight it and to lobby against it. The same situation occurs in Chinese real estate right now. There's a lot of complaints in China that families have to go into long-term debt in order to borrow the money to buy their housing, because their housing has been bid up, like the United States, on credit. How can China lower the price of housing to keep its labor force with low housing overhead so that it can remain competitive, and so that it can use labor's income to buy the goods and services that labor produces instead of paying the banks? What is China
Absolutely.
going to do?
Yeah, and these contrasts that you're drawing, Michael, between Chinese financial structures and what American financial structures have become over the last several decades, this is very pertinent for talking about de-dollarization on the one hand, and the rise of the renminbi or the yuan, whatever Chinese currency has two different names, but the Chinese currency as a major world currency. Now, there are a couple of things that one should say about this. First of all, as far as the dollar de-dollarization is concerned, the fact of the matter is that this is happening because the rest of the world is increasingly becoming aware that participating in the dollar financial system has many disadvantages, including the tendency of the dollar system to incur increasing financial crises and so on. But in addition, there is another point one must make, which is that the dollar system, which rests on the structures of financialization, have been strangling the American economy. They have been making the American economy less productive. They have been increasing social inequality in the United States. So, and of course, all of this has also had repercussions for politics. But of course, the way American politics works, it's the best democracy money can buy. So essentially, the extremely wealthy interests, which are also those interests that have an interest in financialization, are keeping the system going, even though it is having these bad effects on the American population. And even though the dollar system is actually decreasingly attractive to the rest of the world, and therefore we are going to see its demise very soon. So these interests are keeping it going. By contrast, in China, what you have, people say that, the Chinese yuan must be, will internationalize in the same way as the dollar. And this is where they're making a mistake. Yes, there will be increasing use of the Chinese yuan in international trade, but also you are seeing that the new structures that are emerging are not just about yuan domination. On the contrary, China is signing more and more agreements to trade with other countries in their currencies. So it will also enable the currencies of, say, Iran or India or what have you to become used in a limited, regulated way, nevertheless used in international trade. But this will be about trade. So long as you don't have a vast investment in the financial bubbles regularly blown up by the American financial system, you don't need the dollar system, basically. So the yuan will be internationalized in an extremely different way. It will not look the same as dollar internationalization has looked over the last many decades, reliant on financialization. So China we will see that, but it'll look very different. That's the clarification that must be made.
Well, the question is, how are they going to create a international bank to oversee international reserves that do not really contain the dollar, except perhaps some dollars for foreign exchange stabilization? Certainly, the first step is going to be bilateral and multilateral currency swaps. China will hold Saudi Arabian currency, and Saudi Arabia will hold Chinese yen, and the result will be the petro yen that people have talked about. The members of the sort of Chinese Shanghai Cooperation Organization and the allies of China, Russia, Iran are going to develop mutual currency swaps, and at some point they will join together and create an international bank that will be able to create credit to finance the huge investment in infrastructure, in port development, in transportation that we're so far seeing China take the lead in developing along the old Silk Road and the Belt and Road Initiative. This is going to be coordinated by an international bank so that they can essentially have their economy without much contact with the dollar and the euro, because the dollar and euro have very little to offer not raw materials, not really much technology. They can make specialized machinery for producing computer chips, but basically it requires a whole institutional development, and I'm sure that's what they're discussing right now, and this is going to be unfolding in future programs that we'll be discussing.
Exactly. I think it's, we're nearly at 1 hour, Michael. So let's maybe wind down this conversation, but maybe I'll wind it down by underlining something that you and I argued in our article Beyond the Dollar Creditocracy, which is that, there are two ways in which essentially the dollar system has operated on two sort of legs, or say operated with a carrot and a stick. So the carrot has, of course, been the vast financialization bubbles that the United States has blown up regularly in order to invite the rest of the world to buy dollar denominated assets and thereby increase demand for dollars. And that also, of course, has been running into increasing contradictions to such an extent that today, Michael mentioned earlier the Federal Reserve's expanded balance sheet. It went from about 1 trillion in the early part of this century, in the early years of this century, to about 2 trillion, and then 4 trillion after the 2008 financial crisis, and now it is over $9 trillion. Bulk of this money is there because essentially foreigners are not crowding into American asset markets to buy dollar denominated assets. So those asset markets have to be supported by the Federal Reserve. And so this is a really and of course eventually the Federal Reserve, it can become a sort of self-contained system in which the Federal Reserve continues to inflate the wealth of some Americans, but the rest of the world is decreasingly interested in it. The stick has, of course, been control over commodities. Michael mentioned control over oil. Of course, today, many other commodities are also becoming important. Food, of course, is becoming important. Various resources connected with the production of various green technologies like lithium is becoming important. So there will be a big attempt to control this. But American attempts to try to keep control over oil has also been slipping over the last many decades. Oil prices take a turn of their own. And of course, as commodity prices go up, the value of the dollar falls. And so this is another, and essentially, the reason why commodity prices are going up is because the rest of the world is demanding more, because the rest of the world is also developing. And so the development of the rest of the world itself is going to have a negative effect on American attempts to retain purchase. So the sooner the United States realizes the folly of trying to dominate the world and focuses on being a productive national economy, the better it will be for Americans themselves, because Americans have also paid a big price. The world has paid a big price, but so in a lesser way, Americans have paid a big price for US's vain attempts to try to retain dominance over the world, even if it is only by keeping the dollar as the world's money.
Radhika, we could have got $1 million from the State Department by keeping this to ourselves and just telling them how the world works.
Well, I hope instead that we get 1 million viewers. I think this will be far more rewarding for us. So please watch out for our next show, which will be on the 20th, which we will record in 2 weeks' time, and you will see in 2 weeks' time. Meanwhile, please also give us your reactions, your suggestions for topics we might cover. We'll try to do that as much as we can, and we look forward to talking with you every fortnight from here on. So thanks very much, and see you next time. Bye-bye.